Welcome to Cherry Street Investor Education with Kavitha Baratakke, passive income coach and founder of Cherry Street Investments. Education that is designed for you to take control of your financial life. Join us to learn how you can create multiple passive income streams, diversify your portfolio, save on your taxes, and much more. Become a better investor and fast track your financial goals. Here's your host, Kavitha Baratakke.
Hi, I'm Kavitha Baratakke, passive income coach and founder of Cherry Street Investments. Today, I'm here to talk to you about crowdfunding versus direct syndications. Let me clarify a little bit before I jump into the differences. There are a lot of crowdfunding platforms out there, right? Catter, Realty Shares, and others. And a lot of my investors always ask me, what is the difference between investing in some of those versus investing in a direct syndication with a sponsor that you know? Now, let me go through some pros and cons of each approach. We're going through each step by step, and there are 5 major points that I want to cover today. The first one is that some of these crowdfunding platforms have much lower minimums than what you might find with a direct sponsor. Let me give you an example. You might go to a platform where your minimum might be a $10,000 minimum. But when you come to most sponsors, you're paying about $25,000 to $50,000 minimum. So that is the first difference, that the crowdfunding platforms might allow for smaller minimums and hence probably more diversification of the dollar amount that you have. So in that sense, it's definitely a big pro. Now let's talk about the second point. The second point is no direct sponsor relationship. I always tell my investor the most important thing in an investment is not the location, it's not the investment, but it's very much the sponsor. So the big thing I find about these crowdfunding platforms is that you really can do some due diligence, but you don't really know the sponsor. You don't have a personal relationship with the sponsor. You don't pick up the phone and talk to the sponsor. So you really don't have that sponsor accountability or relationship built up of trust. So you're investing into and expecting that someone else does the vetting for you before they put it on the platform. And of course, most platforms offer some level of vetting, I'm sure, but it's more important that you do your own due diligence when you invest into a property. So when investors ask me to evaluate crowdfunding platforms, I always tend to say no, because it's really outside my job description or my role to evaluate these, because it usually takes me a few days to look at all the financials, pro formas, and rent rolls, T12s, before I can go in and figure out if this is an investment I want to make. And that is as a sponsor, right? So it's really hard to go pick something up on a crowdfunding platform and make an educated decision based on the numbers and not just based on what sponsor projections are, because projections are like numbers. They're just numbers that they're projecting that it will be that, but I could easily twist those numbers. So the question is, do you trust the sponsor enough to make that decision, or do you trust yourself as an investor that you are strong enough as an investor really to make that decision, to look at the numbers and to make and evaluate that investment. So that's really one of the critical pieces where I feel like crowdfunding platforms might fall a little short because you don't have access. On the flip side, there might be amazing sponsors out there. And I would rely on people who have invested with those sponsors. If you have that experience, or you have friends who have invested with the specific sponsor and repeated investments, that's really the track record that I would go after. The third and biggest difference, again, is access to a wider range of investments. I think going on a crowdfunding platform can give you a wide variety of investments, not just in multifamily, but office space, retail complex. Your world is your oyster there. So a lot of different investment options and opportunity to diversify. On the flip side, do you as an investor really understand how to evaluate a retail investment versus a multifamily investment? So that is a big question, because numbers really mean nothing if you don't know how to evaluate and vet those numbers and say, is this number right? Does this make sense? So I don't take numbers at face value. I try to evaluate the numbers and evaluate the deal independently and see if those numbers make sense and if they are conservative estimates of what the property could be making. So let's say, I'll give you an example. Let's say I project an 80% return for my investors in 5 years on an apartment building. Now, I usually assume that the market isn't cooperating with me and my cap rates are actually going in the direction that is not favorable. So if the cap rates were to go in a direction that is favorable, that is the market is appreciating, then it would just add to my return projections. So we always like to conservatively underwrite, as we call it. Underwriting is just a fancy term for financial projections. We always like to underwrite conservatively so that we can beat our estimates when we actually deliver and finish the project. Now, the question is, are all the crowdfunding platforms and the investments you see out there underwritten conservatively? I'm not so sure. Now, let's come to the fourth point, is the types of investments. There are a lot of different types of equity as well as debt instruments, which means you're more like a lender, like a mortgage lender, where you're just loaning money for a project. Now, you need to understand the seniority of this debt you're getting into, or the equity position that you're getting into. Are you a first lien, second lien, third lien? What position would you get paid? What's the priority of the payment if something goes wrong with the project? That's very important, right? There's something called senior debt. It takes priority over all different debts. So if the project goes belly up, you know that you'll still get paid potentially, or at least you're on the top of the food chain there. So that's really important to understand when you invest into something. Like, what's the position that you're investing in? Typically, in most of my projects, we do get a first lien. So the lender has the highest priority, like who's lending 75% or 70 to 75% of the project. And the rest is the investors fall into the equity bucket. Now, even among the people in the equity bucket, we might have higher priority to some investor set in some of our projects we do to return their capital. So you just need to understand where you fit in and what the implications of where you fit in are, whatever kind of investments you do out there in the crowdfunding platform. The fifth, but the most important one, probably the best for the last, is that you have to be an accredited investor to be investing on these platforms. What does an accredited investor mean? I've done another video, please look it up, accredited versus sophisticated. And an accredited investor is someone who's either worth $1 million, net worth of $1 million, excluding primary residence, or has a certain income level with them individually or with their spouse total. That is 200,000 individually or over 300,000 for the last 2 years. So if you don't fall into the accredited bucket, then you're not eligible to do these crowdfunded investments, and you have to invest in what's called other investments called 506B investments, which cannot be hosted on these crowdfunding platforms. So access to a direct syndicator is your only way of investing into real estate and other syndications. So I hope that was helpful. Just to summarize, it's the minimum investment amount is different. We have no direct sponsor connections in these crowdfunding platforms. These crowdfunding platforms can give you access to a wider range of investments. And there's also the four is you have different types of investments on these crowdfunding platforms. So you need to really understand what position or what priority you would get paid in. And five, What is your accreditation status? Because if you have to be accredited to invest in these crowdfunding platforms. I hope that was helpful and answers your question about the differences and similarities between crowdfunding platforms and direct syndications. Happy watching, and I hope you find this useful. Thank you. Hi, I'm Kavitha Baratakke. I hope you found this video useful, and if you did, please don't forget to subscribe to my channel so you can get notified of any future videos I upload. I plan to cover a lot of investor education on this channel, and I hope you'll stay with me for it. If you have any feedback on future content you'd like to see me cover, please drop me a note or a comment on my video. Thank you for watching, and thank you for supporting me.